Okay, so today, I want to explain why this is frustrating the heck out of me and what I think is going on here. So, if you remember into the close yesterday, we had a lot of really great opportunities for the Bulls to take advantage of. They had everything they needed. And this morning, the market moved down and Bears came in. I have them marked out here. They were able to push this down. You see tension. We got the gap down scenario and we didn't get a zero test. That was the big thing. The Bulls were going to do that, and they didn't do it. And it drives me nuts when you have great opportunities and people do nothing. This annoyed me off the open, but it's okay. Markets do that. I've got thick enough skin to tolerate it. Well, we get the Bears coming in. And if you remember, this should remind you of this day right here. Back on Wednesday, we had a similar situation. It's really annoying. We had Bulls with some pretty good opportunity just fail, and then the Bears show up right here and take it down. It looks structurally and in terms of price similar to what happened today. The Bulls just keep doing this, and it's driving me nuts. Right there, Bears come in. Bulls had some opportunity into the close yesterday, do nothing. And there we go. So that is how it's set up. Well, moving down lower, you could see that finally decay gets under. There's no real volume showing up. It pops back up. We get a bearish sample here. Under, Bulls get a sample. They give a little hit. Impact, tension, none. We get Bears get a sample on the backside here and again here. So there's all the Bears. The Bulls get a couple of little samples through here, and they're able to hit just this one, have no impact, and then they get another one that just fails. Then they get a sample here and a sample here, and the Bears get a sample right there. And to me, it looks like the Bears they're not doing as poorly as I want them to be doing. And you could see that all along the way, they're able to maintain their control of 30-minute tension. Now, the thing that I'm keying into here, that I keyed into, was that the Bulls were able to pick up a position and then another one, and there was some slowdown here you could see that tension slowed down a little bit, and I could see that this position here was getting a little low. And you could see that that position has become a problem for the Bears. And the reason that's a problem is because if this position gets liquidated, then the Bulls will have fuel to curl tension up. And that's what I was keying into. I was literally front-running proper structure. And if you remember, this is Trailblazers. What's a Trailblazer? Well, it's somebody who's essentially counter-trend trading when all the structure is broken down. Yesterday was elastic. The Bears were able to burn off all that tension, and then today the Bulls did nothing, and they got another pump and were even able to get price lower. This looks like Bears are doing well today. Yesterday, the Bears were stepping back and letting the Bulls have it. The Bears got better prices, and today the Bulls, it's driving me nuts. They got this right up to where we wanted it, right here. And if you take a look at over here, they were able to almost establish twice an inversion or set up a squeeze, and get things squeezing up higher. And if we'd have done that, we could have liquidated that position that was right down here, the one that we were looking at here. If we'd gotten that over that inversion, we could have gotten a squeeze. This would have curled and we would have seen good stuff. So that's what I was trying to get in front of, was that idea that there was opportunity developing here for the Bulls. And I, by nature, am a bull, and I try to cut down my risk. And what happened to me today? So if you guys were following in the Discord, I picked up along here. I saw the things working out. Or sorry, it wasn't there. It was a little bit after. And I jumped in at 15. Well, I saw what was going on there. I saw the opportunity developing in our near future. And so I wanted to jump in front of it and see what could happen. I wanted to see, so the version of me that got into the trade wanted to see decay give us a sample, velocity give us a sample, the Bears do nothing, so maybe this was the volume, and then it just goes like this and then takes off up. That's what I was looking for. But look at what happens with decay. It didn't move towards sampling the Bears. So you could think of this And this is the way I think of it, is the distance here over time, that delta, the distance there over time tells you about where the bears are. And the bears suddenly started to move away. So they weren't piling positions in here. They were thinning the positions out. They weren't interested in selling anymore. And that makes it hard to sample the bears. And that's what I wanted. So as things started to lean away, I started going, I'm not getting the things that I want. And I don't like markets that don't obey my wishes. I know that sounds terrible, but I usually get what I want when I trade. That's important because if you're not getting what you want, that means you're always losing. And if you're too scared to say that you're getting what you want, you need to get over yourself. I wanted to see the bears get sampled and I wanted to see them step aside. Something like an elastic market, but I thought the bulls would be able to revamp getting up to here, take out these guys, a couple here. We had a lot of bag holders that would have been great if those bulls, but the bulls just can't seem to manage that. In my opinion, okay, this is the way I'm interpreting this sort of on an emotional level. If you're a seller and you were able to pick up here, maybe here and here, let's say you have a cash average position right about here, and it's pressuring you. And then you see the bulls come in and they pick up positions and they're pressuring one of your lower positions and they have excellent, big old check mark, excellent opportunity to push you out. Your competitor has showed up at your door and you look them up and down and you go, meh. Are bulls not threatening anymore to you? Are you not scared of the bulls? Are you not terrified of that they'll run you out of the market? Why aren't you rushing to get more positions? Why didn't decay curl up? Why didn't you fill positions here and do your best to try and liquidate this? Why aren't you scared? I wanted the bears scared. I wanted them to go, oh, we better pick up another position, which would have led to a sample. I wanted them to be concerned, which would have given the bulls more opportunity. But instead, the bears went, hey, I don't care. Nah, whatever. They moved their position away. They didn't care. And that sort of tells you a little bit about what the institutional bears think about the institutional bulls. They said, meh. And that's what this was. The bears moving away, saying, go for it. Put the gun to our head. You won't be able to pull the trigger. And that got me concerned. That's why I dumped my position. I decided to pick up another one here after it retested this sort of spot that I thought was a good spot. It popped up. I looked at the numbers. I realized velocity was doing this. It was already headed back down. And I said to myself, you guys are stupid, bulls. And I bailed. They weren't acting the way I wanted. Now, is this okay with me? Absolutely. And I'll tell you why, that emotionally I'm not hijacked. Meaning I can come back and still participate in the future. Because I kept up. I kept up with the story. I kept up with the narrative. I know what's going on. I'm not behind on the story. Now, if I had been unable to keep up with what was happening and I lost or made money, that would cause emotional turmoil. Because there would be a conflict between the things that I did and the things that I knew. And when you have that conflict, you get these emotional perversions, really is what it is. You start emotionally injecting feelings about things. You'll overweight certain things, underweight. I mean, so if you're not aware, the word perversion for a psychologist means that something went wrong in your life and you're perverting something else in order to cope. It's a coping mechanism. So typically when you say perverted, you mean a sexually perverted person who's doing something that you don't like. But in terms of the way your brain works, a psychologist says, yeah?
Some square cereal.
You want some cereal. You want some cereal. So just a second, I'll grab you some cereal. Let me finish this thought and then I'll make you some, okay?
Please, square cereal.
I'll be right back. Okay, I'm back. I got to let him win 1 out of every 3 negotiations, or I'm concerned he'll stop trying to negotiate. At least that's my strategy. Okay, so the reason I bring this up, the perversion thing, is that if you're not careful about the way that you engage the market, you end up with these needs, emotional needs that you don't realize, and then you come back and those needs are known to the market. In fact, I think the market attempts to create these perversions, these needs to say, well, this level or this line has to work for you, and so you overvalue its signal or its signaling capacity. And those are known to the market. Now, what protects me from getting emotional about things is keeping up with the narrative. And this has been the reason I'm talking about this right now is because this is a huge deal with every trader that I deal with. I hear this question from almost everyone. How to deal in one way or another, how to deal with your emotions. And in this case, for me, what protects me from feeling like I'm going to overvalue data points is the idea that I'm keeping up with the narrative and reacting to what I think is going on. If you react to other things, it doesn't matter if you're right or if you're wrong. What ends up happening is that you'll start overvaluing the wrong data points. I don't see this working out the way I wanted. I'm a spoiled brat when it comes to getting what I want, and I didn't get what I wanted, and so I don't want to play. And I'll be able to come back next week and play without emotional problems. I'll be able to participate rationally and with my head on. That's been my experience. And that's, I think, something that's just unique to me. And it might, maybe other people who are similar to me, but for me, this is what keeps me at the top of my game to be able to do this day in and day out. You have to react to the narrative. You have to react to what the people are doing. You have to react to whether you're getting what you want or you're not. And I wasn't, and I didn't like it. And I said, I don't like you. And I walked away. We're not the same. I don't like you. And so now I'm going to wait. I'll wait until you give me what I want. Give me clarity. Set me up again. So that's where I'm sitting. I didn't have strong enough conviction on this, and I'll tell you why. So let's go over this really quick, what I needed to get us to be able to say I feel really comfortable with this. I thought it was good enough that there was an opportunity window. I thought there was a possibility for the bulls to be able to come in and take advantage of some things. And it's still here. It's not that it's gone. It's just that I wasn't getting what I wanted, which was sampling those bears. What I need to really be comfortable, well, we're getting tension up to 53%. So if you want to take the most conservative position, your most conservative position in this market is elasticity. So if you want to be, cut down on your risk, you want to wait for, we went over this the other day, but let me do it again really quick. You need one, and I'm going to just a controlling party, which this is going to look like the counterparty when I abbreviate. It doesn't matter. Okay, 2, we need that controlling party to heat tension up. So things kind of got to get heated. 3, we need the controlling party to step aside, which this is the problem I was having. I thought things were getting heated. I think the narrative was getting a little crazy, and I think they haven't stepped aside. We saw the bears hit here. We saw them impact tension. The bears haven't failed yet, and that was really looming over me. Normally, I will hold. I don't like to get into positions that can switch their direction this fast. Once I re-entered the market today, I looked at what velocity was doing, and I decided this was not giving me what I wanted, and I just threw my hands up. I said, no, I don't want to play with this. I don't want to play with this story. Okay, so this is the problem. This is where I was running into issues. But I was thinking if the bulls can pull this off with 2 longs here, we could push this up, get those guys out of the way, and it could push. That's what I was looking at. I was thinking we could get those bears upside down. And the reason that matters to me, the reason I was willing to jump in there, and I don't want to convolute how you use this method, but if we had turned the bears upside down when they had not permitted us to do it, it would have meant a major bull trend. That's what it would have translated into. Because basically the bears were in charge in multiple positions, pumping tension, and the bears handed the gun to the bulls, and the bulls shot them. It would have reversed the whole sentiment of the market. I was looking at that thinking this could drive a trend that could go into next week, into Tuesday. Easy. If the Bulls were able to take out the Bears, which they didn't. And we're seeing the response to that. We're seeing the response to this huge opportunity that showed up, which I thought the risk was actually pretty minimal. If this had moved up and we had gotten what I wanted, I think we were going to be heading up, 30-60. If I got in at 30-20 and my risk was 3,000, you're risking 20 points to 60. If you're doing that math, you'll say to yourself, that's actually not too bad. And I was thinking major trend. I would love to get in front of that. But they just wouldn't do it. And it bothers me because I see what they're walking away from. And that drives me nuts because I am inherently a bull. I hate selling. I just do. And that's just my personality. And so when I see the Bulls have this opportunity that just needs a little bit of cash injection from some of the big players, I'm like, dude, I'm sure I don't watch sports, but I'm sure if you're a sports fan and you see a huge opportunity show up and your freaking sports team doesn't do it, you get a little crazy inside. And I'm feeling a little crazy about the fact that I know the Bulls have just walked away from a big opportunity, and it's like, ah. So I would have needed to see these, like, let's say this position here. For me to be confident, I would have needed to see it turn them over and tension stop moving down, and then the Bulls get sampled. And then I would have said, well, we saw bearish failure here, where I would have been drawn an X. And the problem that I really ran into that made me more skittish than probably anything else was that the Bears had not failed yet. And that's why I like positions that cannot flip-flop on a dime. I really do. I strive for that. And today, I gave it my best shot. The Bears didn't perform, or the Bulls didn't perform, and I dumped. I didn't flip. I didn't get bearish. Maybe I should have. I don't know. But I don't like the Bears, and I don't like the way that they set up their trades. For instance, how could you have sold yesterday's close? Well, you couldn't have. The best you could have done structurally was here, which means that this is your risk for the Bears. And okay, yeah, it worked pretty well. Sure, that's fine. But this tends to be the story that the Bears tell. They have to wait for Bulls to fail before they run out. Essentially, Bulls are builders and Bears are predators. At the heart and soul of it, Bulls like to build things. They build a low, they build into it, they work together, they communicate. The Bears like to just wait for people to make a mistake and then just eat them up. And it's just not my mentality. I'm a builder. I like to build. I do. I like to put things together, groups. Okay, so you're seeing right now the market's moving down. And you'll say, well, how are we doing this? You see how this is curling down? How are we pulling this off? These guys, and trust me, they were legitimate positions. I think these were legitimate positions. I saw them, I watched them develop, and I thought this could actually turn out pretty well. And I walked away rather unscathed, actually, from trying to participate here because of my familiarity with the narrative. I'm so familiar with how these things work. I saw what was potentially coming and tried to take advantage. It didn't work. So through this range, it all fell apart. And now what's happening is the Bears are taking advantage of these bulls. They're trying to get down there and liquidate them. And this acceleration is coming probably from this group here. And if we push down and get through the lows even further, they could liquidate that second group. Here's where things are going to start to get heated up. If this group doesn't dump, I mean, one tick through is not enough to get an institution to dump. Are you kidding me? They need to be, and I said this before, they need to be shown they're wrong. So let me draw this out. We'll draw the low right there. So you could see I think they put a bit of pressure on that first position, or the second position there, the next one. And I think that the people were dumping were people who are very similar to me, annoyed that the bulls were walking away from something. And that's what's causing some acceleration down here as it puts pressure on these guys and they dump and it's painful. But this position has not liquidated yet. And I think the Bears have it in their minds to try and liquidate if they can. If these bulls don't, let me just make this really clear in terms of narrative. If these bulls don't, If they don't, think about what that means. Think about what that means. If those bulls don't liquidate, if these bears can't seem to push out this, which I'm calling the root position. Why is it the root position? It had the most structure. It was the cleanest. Apparently they hit it, it was the lowest. It was the one that really set up the baseline for most of this. These positions here where you had some push throughs and maybe there, push through, maybe here, they weren't at the low. So there was sort of a secondary, and this didn't look amazing to me for buying into. I mean, it was like a spike down and then just an intermediary range before we figure out what we want to do. So if they don't push out the root position, the bears held the gun to the bull's head and failed to pull the trigger, and it is going to be a huge blow to the bearish position. If they don't push these guys out, and I mean today, that's going to be a big, fat, ugly problem for the bears. They will think of this as a sale, like a sales pitch. And I say this often, and you need to think it. These players need to convince investors that they can get the job done. And if you can't kill somebody, you had a gun to their head, I'm pulling my investment from your party. And that's what's going on right now. If these bears can't do it, if this doesn't push back down and accelerate tension further down, and we don't close at like negative 65 again like we did that, they're going to lose some funding, in my opinion, because they failed to pull that trigger when all they had to do was a little bit more. And in that instance, this is going to be the type of thing that's going to change market sentiment. So can you trade this type of stuff? You shouldn't. In my opinion, the risk here is so high because at this moment, as we move down, the money is flowing into bearish investment. The investors are on the side of the bears. So you're going to literally be stepping in front of a freight train of money. And so I think it's really high risk and dangerous to trade against the investment flow. Did I do it earlier today? Well, yeah, because I saw a pretty decent window that opened up. But that window did not play out, and so I did not hold on. And now the window is shut, and we're moving down, and the bears want to liquidate these guys here. I'm pointing out that the narrative, if this doesn't work, what's online for the bears? The bears need to liquidate this. In other words, they want to. They really want to. The bears really want to liquidate that position. They want to accelerate that because that's how you get investors on your side. And as far as I can tell, these bears just made a huge mistake. Or bulls, sorry. The bulls just made a huge mistake. And I don't see any reason why the bears shouldn't bring this down on them and put it to them. They should have to pay for messing up. And that's how markets really work, in my opinion, is that you get opportunities, and if you fail to exercise on those opportunities, you have to pay for your failure. And I think that's what we're seeing right now. And the market we're getting down. So we're just about 300, 352. So we're getting down under again, and I think this is going to push down. Watch your tension indicator. That's going to accelerate. There was a chance for the bulls, and they just couldn't. They just couldn't. And now they're going to pay. I'm not going to pay with them, but they're going to pay because institutional bulls cannot stop out of a position. And that's what makes it riskier for them than for me. They have to unwind a position, and unwinding can get costly. So that's what's happening here. They're paying for their mistake. And if they were not able to do that, I just was trying to make that clear. If they didn't, why would the bears care? Because the bears have a lot online here. You can't just not do it. So they want to. They want to accelerate tension down. They want to get possibility space in their favor. Now, it's going to lead to an outcome, which I think you could probably predict. We're at 56%. If this gets and closes down at 60%, not even 65, just 60%. That means on Monday, if bulls showed up, they would need elasticity to drive this up. Otherwise, I think we would see more of this. The bulls would need the bears to step aside, let them have it, and then they could pick up liquidity and try and drive it. So if that's what they would need. Otherwise, they'll be able to continue to maybe they could burn it off a little bit like they did on this day. This day had elasticity to it, but you could see they didn't let it get close enough to zero, and the bulls just didn't execute. So this is the scenario. Something similar to what we just did is what we're looking at right now for Monday. And this is interesting because we already have a good idea of what Monday's going to look like. You know what Monday's going to look like already. You already know the type of market we're going to be dealing with on Monday. So you can now use that to influence your decision making now. Do you want to try and buy or sell here knowing what Monday's going to bring? And you can make those decisions. We already know what Monday's going to look like, the type of market it will be, the type of decisions that it's going to have, and what they're going to be dealing with. We already know. So if this pushes down, let's say we liquidate, which it looks like we're headed on the way down there, see at 05, I'd say under 3,020. I was looking at options and I noticed there was a increase in option pricing at 95. I just sort of scan over these sometimes. Let me refresh this. And this is all I do is I go like this. I do this more often. So you can see between here and here, it's about 3 points. Between here and here, we're looking at 3 again, here and here, 4, 5, 6, 7. 3 again, 7, 8, 9, 10, 3, 3. So there's not really a whole big difference. I did that before and it was 3, 3, 3. And then right at this one, it was 4-point gap. So all of a sudden the premium on that one cost more. And I'll do it the other way too. I'll just sit and go through. So there's about 2 points. There's about 2 points right there, 3. So 30-20 had an increase in premiums. And you could just sort of mentally do that really quickly in your head. And I will use those sort of as mental places to be like, all right, well, the premiums cost a little bit more there. So that's what's going on right now. I think that we could move down, hit 3,000-ish, would push out this position. That's what I'm treating that. Like, we're going to have to get down to 3,000 before those guys really unwind their position, or further, 3,095 area below on futures. So we got a little ways to go before I think they really would unwind that position. And so as long as we don't do that, these guys didn't really dump. That's important because of the narrative implications. Remember, this has heavy, heavy implications if the bears can't pull off such easy kills in this game. If they can't do that, they're not going to keep getting the funding they want. So what can they do, or what are our options next? And this is always the thing. I mean, we've established sort of the narrative here so you can understand. What are our options next? Well, if decay moves up and gives us a sample, that's one of the things I was looking for. Velocity moves up, gives us a sample. Both moves up give us a bearish sample. There's no move up scenario here where bulls get a good shot. Now, there is this, which is if the market just keeps moving down, it could find an opportunity for the bulls, which would be a decay retest. And a decay retest is where that you see the side has no chance to get in, and in this instance, both velocity and decay are down. So check mark on box 1. And second is showing that they want to get in. And I think that this here shows some interest in getting in, but not enough interest to be successful. So I think there's a good potential for a decay retest for the bulls to provide us opportunity if the market continues to lean down. So the closest place here for me for bulls is a move down and a decay retest, which sadly for bulls will probably be an aggressive move down, especially with an hour and 15 minutes left in the day. The other place that the bulls could show up would be this, a push up and a sample from a switchback. So we get a sample right there, and then a move from there. These are the two places I think are the most likely for the bulls to show up next. For the bears, of course, just a move up sample, move up sample. Now you know your possibility space. We've sort of shown the boundaries. are move down or move up. What does it mean? The move down would benefit the bears because they could further pressure and likely liquidate that position and get some investors interested in their side, or at least to hold on to their side. So the bears are, I think, highly motivated to keep this moving down to at least 29.95 would be where I think would be just, you're going to wipe out it, like maybe not to 29.95, but at least near 29.95 before moving up or down further, just to liquidate this position here, to show the investors that they can pull the trigger. That's the motivation for the bears. For the bulls right now, they botched up their chances. They have to wait. I mean, the bulls are the dependent party because they have to wait. I mean, their success or even entry at this point depends on the bears' failures. So they're dependent entirely on the bears for their opportunities to show up. So I think the most likely next opportunity that I'm going to be looking at trying to take advantage of will likely be elasticity on Monday. If we can get this heated up enough into the close, the market gets elastic on Monday, and then we get things to set up properly there and give us a chance to ride this up. And hopefully the bulls can take advantage or make that, this type of day. And maybe the bulls will be able to actually get something up and get that over. That's going to be the next place that I'm looking to participate as a bull, which means that the bears, after they liquidate this group here, are going to have a hard time convincing bulls to get in, because I've already got my mindset, because I know what Monday's going to bring. So between now and the close today, this section that's unprinted, no prices, if they shoot this down right here, what bulls are you going to bring in? Unless they develop some wonderful opportunity. I've already got it in my head. My next opportunity is elastic, and it's Monday, maybe an hour or two within the first hour or so into the market. I'm hoping to see something set up. So how are you going to convince me to trade into the close and hold over the weekend? You're not. So the bears will have a hard time continuing this down. Their follow through will struggle because they won't be able to trick anybody. But if they don't push down, so you're seeing where this is building into? The bears need to push it down. But they're not going to be able to trap anyone new because we already all have our mindsets for Monday. So if you can't push it down, it's starting to smell to me like we push this down, liquidate those guys, and we come up. And then you start going, oh my gosh, is this one of those downside channel breakout? Is that how they build? Is that how they work? Maybe. But that's what I'm seeing right here. Bears are motivated to get this down, liquidate those guys. You'll see that happen with tension. And then Monday, I'm hoping or expecting, anticipating an opportunity for the bulls to come in and try and take advantage of that elasticity. Otherwise, I'm going to be sitting back because I'm not a bear. I don't like selling. You guys can do all the selling you want. I'm just not interested. I don't know. It's just my way. Okay, so John, you just brought up the dollar is not moving much. Well, I think there's a reason for that. And I'm going to move this over here. No, I did not stream my stream key. I streamed the URL link to watch the videos. So you won't be able to pause that and get juicy information. You could try. You'll get URLs. Okay, so anyway, let's look at the dollar. And the way that I view the dollar is a little bit different. I'm looking at a 4-hour chart and I make decisions. So this has been rising. I know that's each bar is 4 hours. So this has been rising for a while. And in my opinion, that these are things that front run events in the market. So if it's been rising and I look at this and I'm like, oh, it's rising, then at this moment, I treat this as though we had a rising dollar. So yeah, I'm skewing the way that the dollar, like I'm taking a 4-hour time, or not even that, like 2 or 3 days, and squishing it down and comparing it to the current events or something like that. And for me, that actually works pretty well. I see the dollar as rising. I see debt as rising. And what this tells me is I think that value is a thing that you can put inside of other things like a dollar. And so if you want to use a dollar bill or you want to exit a security, you take the value out, you put it in a dollar, which means that you create dollar demand. But I think that the debt is something that you create to capture. It tries to capture value. So you'll create a debt dollar and you'll try and stick that inside of like a security. Basically, it's fake money buying into stocks. And the best way to do this is to use these kind of dollars to get out of these, to get into your root position, and then get into these to get into your secondaries, secondary, tertiary. And it makes perfect sense. You go in, you take $1,000 in, you take $15,000 and you buy a full ES contract. It works really, really well because they cost about 13 grand, right? So let's say you buy in here and it costs you about 13 grand to get into that position, hold it. It's positive. It comes back and you have another opportunity. Do you want to pull another 13 grand? Heck no, go get your Visa, max it out for another 13 grand. And now you have a multiplier of 2 and it only cost you 1, this root 1. And just make sure your interest rate on this is significantly less than the profits you're going to make, and just do that all the way up. So my expectation is to see debt, this market right here, this debt, to spike every time that we see a secondary position show up. Because I think they're swiping their credit cards, their bottomless credit cards, to buy in again and again, because it makes way more sense to build onto your position with debt than it does to tie up more capital. So really the capital getting tied up is in the root position, and it's the riskiest. If this position fails, it comes down, hits the break even, and you lost nothing, and you can pay back your credit card.
She just called for me.
Yeah, she did. You could answer and talk to her.
But
So what will happen is if this moves down and this position failed, then you would see the debt shoot down because they would pay off their credit card, and those debt dollars get destroyed. They're no longer there. And that's how I use that. That's why I watch these markets, because I think that when you get into a root position, you get out of the dollar and create dollar supply. So dollar goes down. When you take profit, you want to move out of a security, your value out of the security into a dollar, and you create demand. And so the dollar goes up. And I think the dollar and debt tend to front run turning points in securities, because I think this model makes the most sense in my head that I can think of when it comes to trying to trade swing positions in the market. So I'm looking at this over a little bit longer term, and I see debt going up here. And I see the dollar has moved up, not super aggressive though. So if you're going to buy into this as like a second leg in a trend, I don't think that you're going to be using money here. You're going to be using debt money. And debt money causes teeth. Why? Because it's not real money, so it doesn't actually have as much force in it. And it's crazy to me that people think that this market is the same market we had 100 years ago. You're insane. I'm trading this market from my house with high bandwidth real-time data sets. That didn't happen 100 years ago. Our market can consider trillions and trillions of data points instantly. That could not happen 100 years ago. It used to be 100 years ago that if the market was going to come down, this information of the market coming down went out at various time speeds. It was just various. So people would get it at this timestamp. Some people got it at this timestamp, some here. And this lack of organization is what causes market crashes. Well, it used to. It doesn't anymore. This is a different market. I don't have to pay a boy to run my order down. And because the market dropped 10 points while he was running down there, I just created demand 10 points lower, which pushed it another few points. And then the slower boy from the office next door hit demand and it pushed it a couple more 10 points. We don't have problems with that anymore. That's crazy. We fixed that in 2008 when somebody hacked the market and did just that. They revamped it and they said, you can no longer do that. You can't hack the different time speeds. There's one timestamp for everybody. You can slow it, but you can never take advantage of and essentially arbitrage the timestamps anymore. It does not work that way anymore. Okay, so we push down and take a look at this. Let me get this going right here. Look at this. So we pushed down under there. We got right down to right where I was thinking 3,000. Tension still moving down, not quite an acceleration. And then we get some trapped orders. And you might be thinking of this as open interest theft. You might say, did they just push these guys down and then try to steal their orders just to bring it back up? Well, I'll tell you what. If this was open interest theft, and essentially they got bigger fished, is what I... If they got bigger fished, and there was a consumption of institutional liquidity, that the size of this fish right here is massive. That's what that would be. Because you cannot take out large institutional positions without being a larger institution. These were legitimate, I think, liquidity and legitimate hits with legitimate opportunity by big players. If they just got open interest theft, that means that that participant was something like Illuminati level, whatever. They're like, we're looking at the funds that are the Supreme Court is in charge of. They're personal funds, because we all know they cheat out the nose. Freaking Supreme Court. That's who this would be. It would people who have actual knowledge, which us in the world, and by us I mean hedge funds and large institutions, are not privy to actual knowledge. And actual knowledge always has to do with policy making or laws. Big, huge fish, when it comes to like, they know things because they change the policy. For instance, one time we had a market crash, and it was like, brr, 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 brr. The Federal Reserve tries, and then right at the very low, it turned and never came back down because they changed the law around how banks could offload bad home loans. They said, you're no longer allowed to take a bad home loan and just throw it out to them, evict the homeowners, and then send that home to auction and keep whatever money you make from the auction. When they shut that off, the market stopped crashing because suddenly the risk shifted. It was policymaking, and the only people who really could ever do that are policymakers, and you're not going to find out about the policy making until later. You're not going to get that information in real time. Even if the news tells you it was real time, it wasn't. So policymakers are the only ones who really are legally allowed to cheat. I don't think we should let them, but they do. Okay, so I don't see right in here. You could see that we had some acceleration, which I think was this group, but this has not really accelerated down. I'm not entirely certain that we hit this group here. I don't believe that we did. It did push down, and it was scary and aggressive and pressured them, but I don't really see acceleration here as we did that. So I need to see acceleration on tension before I go, oh, okay, there it is. Otherwise, I'm just going to keep waiting, and I'll just wait and participate tomorrow if that's what I have to, or Monday, sorry, if that's what I have to do. But at this point, it looks to me like they pushed it down because they had to. There's a lot of forces on the bears to do that. They're able to get tension down. We're at 56%. And right now it looks like we're maybe I should put the number right there, but it looks like we're targeting about 60% positive upward force on the market, which is pretty high. 70 is extreme. 80 is insane. And 90 is stupid. Just absolutely mind-boggling. It means that, well, it goes to 100, that's it. It means that every single available, in my opinion, every single person is losing money in the market, and it makes things unfair. If you got to 100%, it would be like one person and millions of people, they're slave. It would just be enormous amounts of funds being transferred into their one account, and insane amounts, saying, "Give me your money," and they're like, "Yes, yes, you get it." And all the people hand their money over. One tiny one account is basically getting all that money. That's sort of the way that I would interpret a 100% tension level. Insanely unfair, crazy, and you would see prices just go absolute wonkers, just as that one institution just gathers everything. And that's what I would just, it's chaos in the streets. We've gotten to 95 before, and it was just nuts. So I'm looking for this to move down a little bit more right now. The next event that I want to see into the close is, I'm wondering, are you going to be able to keep this down? And keeping this down, in my opinion, would mean that you convinced people to try and buy. But if they can't convince anybody to try and buy into this and bag hold, then the market's just going to do this. I mean, it's going to come right back up to that place likely where there was opportunity on the table. That's probably the first place it would go right back to. It would say, well, let's go back to where the things were looking good for the bulls. Maybe then we can get some bag holders here. So that's what I'm looking for. Are we going to just do this into the close, or are we going to do this into the close? Because getting bulls to come in here is going to be tough. I mean, to keep this going down, we already at 2,000, negative 2,128. That's, I mean, if you keep in mind, there's about 3,060 stocks in the market. And so this is not 2,000 stocks down, just so you know. When you have A minus B, you lose the amount of B in A. So it's not 2,000 down, so many up. It's, you have to say 3,060 minus 2,000, say 100. Now let's do this. Let's see, to make the math easy. 3,060 minus 2,060, right? And we just ignore all the 60s, right? And then so that leaves us, we'll get 3 minus 2. So what is that, 1,000? Then you take that and you divide it by 2 because it's shared between 2. So you get 500. So we have 500, about 500 stocks that are up. That's what's going on. So this would be 500 plus minus whatever is down. I don't know. I'm thinking about other things. So you have to keep that. There's 500 stocks. So it's different than this number shows you because you're subtracting them from each other. Anyway, so right here, look at this. We're popping up. Are we convincing someone to come in? Is that what they're trying to do? Or have we not convinced anybody to come in? The next event here, it's looking like, I mean, it's not going to take much before those bears get sampled. I don't think they liquidated these bulls. So there's absolutely a chance that there's a bigger fish right here for the bulls. This could get really interesting. I'm not doing anything right here because I participated in the narrative. They weren't playing the way I wanted them to. I'm a spoiled brat. I get it. And I can just sit aside until tomorrow. John said, have you ever looked at the spot gamma and their levels? Yes, SPY, 3K, 300 SPY. If we're unable to break through and close, the sharp spike up due to dealers having to buy back futures relative. Okay, yeah. I know what you're talking about. Yeah, and yes, I have. I have the options indicator that I've been developing, but it's a nightmare because Thinkorswim doesn't deal with high volume of data sets very well. And when you're pulling in options, you have to get, I mean, it's a ton of options data. And so what I have to do to run that indicator is shut down everything but that indicator and then wait 5 to 10 minutes while it loads. It's a lot. And then I plot it, and then you can find where that you get, what I've found is pretty much that if we had a volume profile of options data, that you have the nice round numbers like 3,080 or 3,000, especially, that have huge amounts of open interest, and then 3,080 high amounts, and then all the other ones have like this. And so you have actually 3 data sets that you have to, and I haven't built this, but you're going to have 3 data sets. You have the ones that are, thousands. You have the hundreds, the tens, and the ones. So it's 4, but what I saw was 80. So it's 4 data sets. I'm sorry. So every time that you get a new one of these, and so you have to take this data set, subtract it from that one, this one subtract it from that one, this one subtract it from that one, then plot all 4 to really get a good idea of what the curvature looks like. And Thinkorswim just goes like this. I'm done. I don't want to do it. Just dies. So you have to eyeball it, which is a pain. And so you get 4 data sets that you have to calculate off of. I'll run 200 strikes, which means you're pulling 400 data sets. And if you want the bid and ask, it's 800. So I just walked away from that. 400 data sets, and then you have to do analysis and visuals on all of them, which means that this is going to be your 200 strikes is here's your data, or really it's a n, and then it goes up to the like 4th power. This is your how much calculation is, and so it gets nuts. And Thinkorswim just doesn't do that kind of calculation well. So it's an n to the p problem in terms of calculation, and Thinkorswim just. So I've looked at it, but I only look at it after the market closes, and then that's it. But I agree that if you have the market needing to compensate or hedge for positions because of options, I think that creates demand. I think it's important to note that the market knows things, like they're very familiar with how things are working out. And so I don't think that they do risk on, risk off like the rest of us. I think this is a improper way to view risk. I don't think it's binary. I think that it's risk low, risk high. And the way that you deal with your positions is in a spectrum. And I know that risk on, risk off has implications that deal with the Forex market, but I think this is a mentality that people have picked up, and I think it has to do with the risk on, risk off like phrase. And I think risk is a spectrum. I mean, when I picked up a position here, I felt like I had moderate to high risk. That's what I was thinking. But it didn't mean I was wrong. It just meant it was moderate to high because of the way that the narrative was working out. And I was okay with that, as long as you can actually understand and deal with your risk properly. It's not that you have high risk. It's understanding whether that your assumptions and your deductions and your narrative is even close to reality. Because essentially what it comes down to is your ability to pick up on narrative. Let's say narrative is NA. Your narrative accuracy percentage, so percentage 1 to 0, is equal to your predictability. That looks terrible. With your ability to predict. This is just true. If you can predict what's going on, you can predict what's going to go on. And that these two are causal, that from my experience, being able to figure that out. And for instance, figuring out that these guys had this opportunity, it wasn't working out, led to a causal relationship saying this was going to push out a new low. Now you could say maybe some other things, but in my experience, that's just how this works. Your ability to figure out what the narrative is determines whether you can predict prices. And a lot of times your narrative defines your actual risk in many different ways. First, if you think that the bulls are coming in with full force, your risk is much different than what we did today, which was you think the bulls had a good opportunity. The risk is just different. Your risk profile just looks a little different, smells a little different, it gives you different motivations. So I think that it comes down to narrative. And what I mean by narrative is not it's a story, sure, but it's the way that your brain metabolizes data sets. I'm going to be able to do this. Basically, data over time. and into the future. Anytime that you're dealing with a data set that needs to be cast into the future, your brain metabolizes these data sets by default into story forms. You create heroes, you create anti-heroes, you create story formats, you create hopes and dreams. You do this by default. It's not a learned behavior. I think it's something you're essentially born with. It's because that's what humans are good at. We share data in story form, not in raw data format. You don't tell your kids, 5 out of 6 kids don't get enough nutrition. Eat your beans. No, you say to them, hey, did you hear about that neighbor kid went to the hospital? And they're like, yeah. And you say, he didn't eat his beans. And they go, oh, they eat their beans. You tell them a story. Humans are by default storytellers. Oh, did I not move it? I apologize. Okay, so here was the formula I wrote before. Your narrative percentage equals your predictability percentage. This is how I wrote that. And your narrative, its accuracy percentage and type defines your risk profile. So those are the two things that I was writing out here. Your ability to create an accurate narrative is yeah. So those are the things that I wrote. So I think that it's crazy when people say don't use your emotions, don't use your head, because you're built for that. The most intelligent piece of you is your emotions. The fact that you get red flags about a person you're dating, the fact that you're suspicious of kids who do certain things, it's these feelings that tip you off that you should consider those data sets more seriously. Human beings are emotionally intelligent. We are so good. When people tell you not to do that, what they really mean is, I don't know how to deal with emotions because, I don't know, they're scary or they didn't deal with it in the first place. I think you should bullnose. You should go right at your emotions and say, how do I put these to work for me financially? Because those are your most intelligent feature. Everyone on Wall Street has a high-speed, fast-paced machine learning algorithm that knows everything. That does not give you an edge. Everyone has that crap. You can get it for free most of the time. Machine learning is not amazing. What machine learning does, if you're like, well, what about the algorithms? Well, algorithms, if you're going to take a machine, what a machine does is it defines a pattern, which your emotions do, by the way, a pattern with an expected outcome. Somebody approaches you with a gun and they look angry. That's a pattern. Your expected outcome is they're going to point that gun at you and make some sort of demand. If a good machine learning algorithm had video footage of that, it would not get the smells, the tones right. It probably would miss out on the ambience. It wouldn't know basically all those things that human beings know. Maybe it's this time of night, these things are going on in the news, all this stuff. You'll access a lot of data sets that even algorithms will struggle with, but they would probably be able to pick up on his angry face, the gun, and maybe even say, this guy's going to point a gun at you and make a demand. But the only reason they know that is because some jerk programmer said, when you see a gun and an angry face, they're going to make a demand. And that means that no machine learning algorithm really can be better than the programmer who wrote it. You can't take people out of the machine. You can't. I don't care what people say. They can never be different than you. And if they are, it's not because that they're magic. It's because you suck at programming. You got an outcome you didn't expect because you suck at what you're doing. You're not defining the problem well enough that the program can actually figure it out. It's your fault. And unruly programs come from programmers who aren't doing their job correctly. You can't do it. So when you see a market do something, it's doing what the coder told it to. In other words, it's doing what the coder wishes he could do in real time. So I don't think there's a difference. You do exactly what these do. But what's funny is that these algorithms are trying to define human emotions. So in the end, they're just trying to figure out what you're doing. That's it. That's how they write them. And yeah, they basically, you would hire a physicist to deal with this problem, accessing more data sets and making making it clearer. But at the end of the day, their end goal is to figure out what everybody's doing and figure out their emotions, because emotions let you define triggers, and triggers make people stupid. And stupid people buy and get stopped out over and over and over and over and over, and they're predictable. So if you're a high-level physicist, it's not that you're trying to define the triggers. You already know about the triggers. You're trying to say, where else can we collect data? Let's go scrape Twitter. How do you scrape Twitter with an algorithm that gets pumped into your trading platform? That's a tough problem. How do you go out and watch all the news? Well, you got to get an AI or machine learning set up to watch the news, look at the faces, see the responses. Then you have to access all the data sets, like how many people are watching, look at the responses on Twitter, take a look at how the trades reacted to that, put all that together into a machine learning algorithm. Really, all physicists are doing is that they're showing up and saying, yeah, we could take all that data set and pump it into a machine learning algorithm. You can't, because you don't know how. And if you do, you should be doing it. So that's what they're doing. The physicist is not redefining the trigger. They're not increasing people's ability to figure this out. That's an old problem. It's never changed and never will change. They're increasing the ability of the machines to see the emotions by broadening data sets, craftier algorithms that can pick out data from different things. Maybe they hack into all the trading machines and they make somehow they maybe get the volume of my microphone, and they're like, well, we decided that, we get the volume, that's a data point, we pump it in, and that helps our algorithm get more intelligent. Sure, it's going to take a really smart person to make all that happen. That's why you hire a physicist, not because you needed to know about emotions and triggers. It's because you wanted better data sets run into your computer that could potentially give you an edge, in that you don't have to sit and watch the market, because every rich person has the same stupid dream. All of you have the same dream, is to sit on a beach somewhere, drinking some sort of liquor, listening to the water crash while you make your billions and do nothing. Every rich person wants to be on a vacation while they make billions of dollars. That's all rich people want. That's it. They don't want to have savings. They want to make money while they're lazy. So you hire smart people to do that. But you still have to figure out how it's done. You still have to, they're going to say, okay, what do you want me to do? And you say, okay, when people sell too much, make it buy against them. And they're like, oh, okay. And then they try. So it's the same dream across the board. Do nothing, make money on vacation. And it's dumb. I think it's lazy and dumb, and I don't know. Maybe it works, maybe it doesn't. So because I don't have access to high-level physicists who are willing to do this, I have to sit and stare at the market and become objective about my emotions, because I'm the thing they're trying to measure anyway. I measure me. And then I go, oh, I'm excited. I'm not excited. I like this. I don't like this. These things are happening. And I make decisions based on the narrative and my emotional state all the time. Absolutely. That's what they're trying to do. That's what I'm trying to do. And what's nice is my hunches, I think, are better than their algorithms, to be honest with you. When I sit and watch markets and I get an idea in my head, I think that I actually pick up on the idea faster than the algorithms pick up on the idea. But algorithms are better at execution than I am. And that's where it's like, oh, who's better? I don't know. I think algorithms do a better job at executing orders, but I do a better job of picking out what's going on. In my opinion, I can't prove that. It's just my opinion about markets. I think I figured out the market was falling apart before a lot of the algorithms did, or something. I don't know. That's what I think is going on. So, got me to vent again about subjects. All right, so let's take a look. So you see how this pushed down, and we're doing the sideways thing, and I think this is the problem. Bulls, or buyers, I wouldn't call them bulls, buyers are coming in and trying to catch a reversal, and it's giving those bears the ability to at least keep the market here. I don't think that most buyers have much tolerance for risk, so that I don't look at a buyer right here as though they'll unwind their position. I look at this buyer as, if it moves down, they're just going to get out because they suck and they know it. And emotional people just buy high, cover halfway, sell low, cover halfway. And they essentially set up, more than anything, they set up a level that's in the middle of the range based on where they keep stopping out at. And then they set up these little trigger points, like here's a pivot, and they're like, oh, I want to I'll get emotionally triggered here, or they'll buy just before, or they'll buy just after. I don't even track that crap anymore. I used to track it for years. I thought it was great. But I realized that tracking little tiny idiots with little tiny accounts leads to little tiny profits with massive losses. I don't care about your $10,000 account. I don't even care about your $1 million account. If you don't have 100 million or at least 10 million and you don't have some irritating investor bothering you about that, I don't care about you. And those people, I want them to be connected and I want them to consume liquidity, not grab price action crap. Sure, price action might work. I don't know. I don't care. Price action's for poor people. I like rich people stuff. Consume liquidity. Look at your, like if a poor person makes a box and they sell it to a guy who wanted it. This is a poor person business model. Yay! A rich person says, here's a box, I'll make 10,000. I will sample this geographic area around my business, and that's some distance, and I will distribute 10,000 into this area. And I'll walk away with some percentage of the accounts. And when you get really rich and really big, like Mr. Bezos, you say, what percentage of US paychecks, sort of like taxes, can we acquire? And I think this is where Jeff Bezos sits. I think this is where most wealthy people sit. They look at an area of people and they make mass produce a product that they distribute over an area, and poor people make a box and sell it to their buddy for 10 bucks. And it was unsustainable and didn't generate wealth. And when I look at this, I think this is liquidity right here. You accumulate a bunch of people to purchase a product, which is the product of being wrong. And then you trade against them and you take their money and they pay you a percentage of their accounts. It works just the same. And I think Jeff Bezos, probably if he were trading the market, he would not look at liquidity the same way we do. He would look at probably regulation, and he would probably be investing in policy making. I don't invest in policy mostly because I don't really understand it. And that's the question, what's more important than profits? Policy, power. If you can predict when they're going to change laws and to what they're going to be, you can make a lot of money because you can actually take advantage of forcing the wealthy people of the world to change. And there's a lot of money to be made there. So I think this is sort of the place that I like to sit at. Yeah?
Cereal?
Sure. Where'd your cup go? Go grab it. I'm going to pour him some more cereal. Just a second. Okay. So anyway, that's my opinion on why I don't usually pay attention to smaller ranges. I try to keep things zoomed out. All of these calculations from velocity to tension, decay, these are 30-minute chart calculations. I don't look lower than that. I do have this on, which is bar to bar, the new extremes, but it's a little too volatile. So I look at it, but I don't usually bring it up a whole lot. This one I like because it models the day. So this is a different type of analysis. It's a percentage of accumulation. And what happens is that this actually models current state, which is different than some other ones. So they're all at least 30-minute in terms of their time frames. And I think it's crazy to operate lower because I don't think anybody with money actually operates lower. Not because you can't, just 4 people down there. I don't care. But I look at the 1-minute charts because I like to look at the way that it looked. I love to look at every single tick. I like to see how every bar looked and take it in, because you got to have thick skin. You can't see a tail or a bar and flip out because of one. Like, you have to watch everything so that you can get used to how things look and how they move and what they look like and how it hurts, or you'll have a hard time folding anything through stuff. So you look right here, maybe we're getting a little bit till we got that range, and this tells me that some buyers were coming in here and they're able to hold this sideways. But again, like I said, my mindset's already on to Monday. I'm sitting here going, meh, I'm not going to play until Monday. So I'm not sure how they're going to convince any real bulls to come into the market. People with the right information, with accounts that can trade. I don't know. I have a hard time seeing them being able to do it. But they are convincing some buyers to come in here, and they're keeping it sideways at least. If those buyers hadn't come in, I think it would have just moved right back up to here, and we would just sat right there. Either way, I'm not really all that interested in this market right now because of that, the way it's set up. I need more data points. I need more. I can't go throwing stuff out there just because this looks like a low. It looks low, but in terms of narrative, it looks mediocre, middle. This looks mid-range for a narrative. Like, we could just totally set this range right here because the Bears have control. They were able to take out at least these guys. But you can see a little bit of acceleration there. Maybe these bulls are realizing that they're not getting their money back and they want to dump. If they don't let go, I don't know why why bears wouldn't keep pushing. I wouldn't. If I were a bear, I'd say, nah, I'm not going to let you guys out. And this is where their position is. What would you do? Would you let them out? Let's see, we could probably put this right there where the volume ended. You can see it sort of lined up with there, right where the volume ended there. So trouble with the bulls today. Yesterday was a little better. There we go. Let's keep going. Yeah. Let's keep going. See if we can liquidate that position. I want to see some acceleration here. I mean, there was some decent opportunity here, so this should correlate. Looks like we could, half hour, we could totally get this to 60% into the close. That could create some elasticity. The biggest issue that I'm really today is they didn't do enough. I mean, the bulls were able to sort of move things up, and I think that they approached the opportunity today a little maybe. But look at this right here. It's like it got suppressed, and it's like price just isn't enough. I mean, price only moves are not significant to me. Like, this looks like price moved up and they just couldn't manage really getting much done with the internals. And it was like price only type reaction. And I think that's irritating to me because it looks like the bulls had some great opportunities and failed. And I don't like that because I tend to be bullish and it bugs me. So I think it's like my team is losing, so I've been annoyed. But yeah, they failed. We had some serious bullish failure that fell apart here. They had great opportunity. Yesterday I thought was pretty good. I think things were pretty clear. And another thing I think that happened, and I was actually thinking about this during the day, was look at this. We had a push down and a push down, move up to a range. And this has a push down and a push down and move up to a range. And I think this is some form of symbolism. It popped into my head and I was like, oh my gosh, am I thinking about this? And I did consider it. I didn't mention it. But this is sort of that symbolism that I think is important. If nobody else noticed that, I would be surprised. If you traded yesterday at all or watched it, this should have been something that sort of popped into your head. It almost looked the same. And then you see, like, what happened here was it dipped further than you'd like and then shot up. And today it dipped further than you'd like and kept going. And so I think this was sort of symbolic in that it probably had a lot of people thinking, okay, it's fine, and this is going to head up because of the previous day. I think those look pretty similar to me. I don't know, maybe it's just me, but I felt like I was being reminded of the previous day, and I didn't like it. Symbology. Yeah? Go ahead and go. You can go.
You have to help me.
You want me to turn the light on?
Hmm.
Okay, I'll turn on the light. So John was saying the 200-day moving average buyers are underwater. So you mean that it came down, hit that 200-day moving average, had a response, and then now is moving under it? Because I think just moving through a moving average, I don't think that would, I would call that underwater. You have to have like a response from it first. Something else that I've noticed that's sort of interesting about this, and I know I haven't talked a whole lot about how I use this whole situation, but essentially when you're expanding down or when the market's moving directionally, usually you get outside. You kind of see we got outside of the value area. And look at this. We've been able to advance, and we're not getting outside of the value area. We're actually staying inside of it. It's finding volume as it goes further and further. And essentially we had the point of control move down as we got down there. It's been down ever since. So this reprice lower, and one of the things that I really like to see into lows is the OER, which you guys know about. Outside, inside, retest, run, which would be, if this is your value area low, and you have it maybe here, you get the price to go outside and maybe inside, and then it retests the point of control, and then it tests the low, and then it'll run up to the value area high. And so you have outside, inside, retest, run. And in this case, we're not getting outside. We're just inside, constantly pushing down to the value area low. And that tells me that you're getting volume lower and lower. And at this point, one of the things I was watching, I was thinking, oh, okay, and I pointed this out, we got outside, kind of came inside, retested that point of control. You might even look at that, but came down, retested the low right there, gave us a second spot, and then got above the point of control for a minute. And the idea was to hopefully get us up to here. Then it pushed back under the point of control, and it was like, what are you doing? And then now we're getting another low. And so basically, when you see the volume, when you see price start to trend, what happens is you find more and more volume at further and further prices. And that's what we're seeing. And the reason that the OER sort of works is because you're not finding more and more volume. And so it wants to go back and cross over the range. And in this case, it looks like we're finding that volume. The volume is showing up at these levels and keeping the value area down. And that's essentially what a trend is on volume profile, is more and more volume further and further and further. And the point of control keeps up, the value area keeps outside of the range, and you just keep going until at some point price breaks out below the value area for a little while. And then we get it breaking back in, retesting, and running back up to the other side of whatever the value area is. And there'd be a point of control right here. Oh. So this is the thing that we haven't really seen cleanly. We saw a little bit here. It was kind of messy, enough that it was able to provide some opportunities, but it didn't really set it up. I don't think we've quite got that imbalance that comes from not finding volume at further and further prices. Jim's bringing up XLF and IGV. I know I don't have IGV going. Let's see. I think you guys are seeing this here. XLF financial. Is it showing? No, it's not. That's not the right one. I'll just bring this chart down. How about that? There we go. I don't. Oh, this is week to date. So yeah, here's XLF. They're all zoomed out because I had it on a smaller screen. But you can see XLF here moving down, but they're all sort of moving down. I mean, they all had this like big drop today. Everybody was feeling it across the board. They all had this skid right in the morning. You can see that. This freaking biotech, probably because of the corona, which, what is corona again? I can't remember. I've totally forgotten about it. So they're a little crazier, but they did have a move down eventually while everybody else didn't. A P for, here's a P for Pierce.
Thanks.
You're welcome. So we all sort of had a move down today. I'm not sure what IGV is because I don't have it up. I can pull it up here. This will take forever. The software index. So it's like a derivative of the tech industry. Interesting. Okay, so let's see where we're at now. Not much has changed. We've closed a little bit here. You can see that this is getting closer. And so the way that I look at that is I'm thinking that the bears are moving in from the future. They're coming closer and closer to taking a look at a velocity sample. Decay, no progress. So say a pivot. Is there a pivot? What pivot? If you're talking about a cash pivot, maybe I have a past one or something. That's not it. Talking about a cash pivot, Burger? Oh, he's got a market maker dealer pivot. Okay. He's saying there's a market maker dealer pivot at 29.78. A market maker dealer pivot. Which, yeah, I mean, I got where it's okay. So we're at 60%. We could actually move a little further, especially if we keep pressuring this position and they keep not really letting go. This is how you pump tension. I mean, I say this, how do you pump tension? You liquidate the counterparty, and today the counterparty is the bulls. So, there, I'll keep that written there. So we can keep an eye on it. So that's what's going on right now. We're getting that pressure. It's moving down, pressuring these guys here. And we have just a little bit of room here. You can see we're at 11%. So if you take 11, it's negative 11. We're going to ignore that and multiply it by 20. You get 240. So 240, and we can take that and say negative 2,177. So we're going to need to see this up 200. So at least 1,800 or so, like that, just roughly estimating. About 1,800. So we'd have to get this to move up about maybe a little less than 18, but about 1,800 or so, maybe 1,850, we'll say, before that we get that zero test. And there's only a half hour left, so it's possible. I think that's totally possible to eat away 240s on this here. But I think that the bears would rather liquidate this bullish position, since I think that was the whole motivator of pushing down anyway, was to say, hey guys, we can still control the market. So I think that pressuring those guys until we see some acceleration here, and maybe there was a little bit there, maybe, but it wasn't really pushing down. I mean, come on, let's get this going. Get this done so we can get back to what I like to do. Yeah, it looks like we're still getting that value area is still keeping up. See that? It's still keeping up. We're not moving, we're not breaking outside of it and expanding. The way I define expanding with a value area with volume profile is if you're outside of the value area and you're moving, you're expanding. You're expanding the market. So this is just keeping up. Looks like these bears, they're keeping going. We still haven't really found that liquidation. I think we got this first group. I think these guys are they're gone. I think the next group is right there, and we still haven't gotten them. I'm really not seeing it there. I mean, you could almost maybe see a little bit, but gosh, I'm under the opinion that if you have to zoom in with the tension indicator, that you're getting too close to it. Like you should be able to see. Like you could see this right here. See that acceleration up? It's like obvious. You see that this accelerated up from impact or stuff like that. If you're having to zoom in to see a little tiny blip or boop here or there, you're getting too close to it. There's a 30-minute calculation. You should be able to sit back and see exactly what's going on a 5-minute chart. That's what this is. So we got down to the 95, which I'm going to take a look at the option strikes right here. So 95 is the one that I was tracking. You see we have let's see, 5 to 8. That's 5, 6, 7. That's like 3, 8 to 1. That's about 3. It's about 3 in there. Got 3. That's 4. So 29.75. And you said 29.78. Right. So you see that how this is for a second there, it was off. 5 to 8 to 1, 1 to 4, 4 to 7. 5 to, it's down to 3. I'm not sure. I think that I'm not sure if this is going to keep going down or move up right here. So I'm not sure. At any rate, for going into the close of today and what we're looking at into this close is we have bears successfully taking on this market. And they were able to successfully pump tension. We had bulls try a couple times and fail. And so what ends up happening is we're going to run into our victory lap. And if you remember, the victory lap is when you have the controlling party successfully take out the counterparty or they win, then the victory lap happens, and a lot of times it's a counter trend move, and that's the victory lap. So I think the bears have successfully over and over again been able to, except for here, maybe there's a little trouble because of this, but overall, they had a victory. They pushed it down. I think we had some acceleration for this group. Not sure that these guys got knocked out. But at the end of the day, I think this is the victory lap. I think selling here is the wrong choice. I think something like closing somewhere in this area, maybe something like that would be all right with me. John is asking, if bears don't liquidate into the close and pump tension, would you consider a bail failure? That's tough. I've been thinking about that. Actually, that exact question. A little. I don't know if call it a complete failure because they were able to say, so it's like they partially were able to take out this group about here, but these guys, it's ambiguous. Maybe that's not the best selling point. Maybe that's the problem. The bears are not definitive action takers, and that's not what people want. So a little, yeah. I mean, especially if this does this, closed up here or something like that, we get a ramp into the close. I'd be like, dude, you guys just totally moved away from your opportunity, and that would look like failure to me. Closing down here with these guys upside down, I don't know that I'll call that failure. Maybe just waiting to do it. Maybe it's something to use for, huh?
The tablet died.
Are you sure? It did. All right, you want to go plug it in? Here, Pierce. Hey, buddy. Go plug this in, son. Thank you. And Joe is still long. Joe, you gorilla. Joe believes. Joe has a narrative in his head, and he's holding for it. And gutsy, too, especially after the Bulls showed some weakness and were unable to take advantage of something. And I don't know that I necessarily call it weakness. Struggle, maybe. They're not quite early.
Big TV.
Sure.
But I want to hear it so I can be happy. Like to hear it.
Okay. Yeah, just a second. All right. I didn't get his show on. We lost our remote to the Roku, so I have to use the old iPhone thing, and it's for some reason not finding our TV thing. For some reason. Once that happens, I get them set up. Look at that. Look at that. What is this? Surprise, surprise. And we're back up to our original position right here. Nope, and so we got some people. Happies, re-entered long at 95. Good job. Here it comes. Here it comes. Oh my goodness, right here. Look at that. We're gonna get our zero test with just 12 minutes left in the day. Let's see if we can get this sampled. Sample those bears. Let's see what they do. This should be good. Oh yeah, and take a look. Everything's starting to work out now, right here. Look at that. We're over the 145. Oh my gosh. This is getting inverted into the close here. If we can keep this above that or just run and take a look here, we're going to get our sample. There it is. We're getting our sample. Tension has curled up already, which is not looking good for the bears. This is looking good. She didn't come over today. This is looking good. Now, if we can get these bears to do absolutely nothing, we need to find some trapped orders. So we want to see some trapped orders show up right here. Oh man, this is going to look intense. It was like dire for the bulls and yeah. I don't know. And it's not connecting. I wanted to get your show set up, but it's just not working. I may be consuming too much internet. I'm eating up the internet, Pierce. There's none left for you. I'm sorry.
Well, you can get it.
It's not working. It's not working. Because I'm eating up too much internet to do trading. There's none left for you.
How do we get it back on?
I have to get done with what I'm doing.
And then it can go on?
And then it can go on. Mm-hmm. You go see what Max is doing.
He can shut the door again.
We'll go knock on the door and say, let me play. Oh, look at this. So we got our sample, and look, we're getting green here. This is people coming in and trying to sell this spike, in my opinion. They're trying to sell that, and we can see them doing that. We did not get trapped orders for the bears to trade against. We're not seeing the liquidity that they need to make things happen.
So no.
We're right here, -1. Just this is. It's like it waited right until there was just no time left, and you have to ask yourself, yes?
So no.
You want to play with Legos?
You can play with the Legos with me first, and then you can do that right now.
Why don't you head outside, swing on the swing, and I'll come get you in a minute. How's that sound? Okay.
Together first.
Okay, so the question that you're having to answer is, do you want to hold on over the weekend? And this has time pressed us into the situation for both people, for both parties. The Bears would have to hold on over the weekend. The Bulls would have to hold on over the weekend. Moving up. And do you want to? Because you don't have a choice. If you decided that you were bullish here and you tried to hop in and ride that up, you may be forced to hold on to some pain over the weekend. The point is that holding over the weekend is never my favorite thing to do. So getting this to push up and finally give me what I want after a ton of heat into the lows here, where we get that bearish sample, and not getting the volume here. This is time pressing everyone now. Are these bears going to hit? Are the bulls going to take it out? Are we going to get this to pump up? These aren't questions that we are going to get answered until Monday. And that means you have to agree to play this game. You have to agree to 2 days worth of nonsense that this world has offered us over the last little while. Sure. Once I'm done, I'll come jump on the trampoline with you. Okay, have fun. So I think it's asking a lot. These days, 2 days could change everything. If you remember once a while ago, it was like, okay, everybody's dealing with coronavirus. And all of a sudden, it took just a day or two. And it was like, okay, people are rioting and burning down targets. It was just like instant. And so, what could happen over the weekend? And I think that's a difficult thing to swallow right now. But things just flip flop so quickly these days. So asking somebody to hold over the weekend is kind of a lot right now, in my opinion. But that's the question you have to answer. Can you hold over the weekend? And we're still looking. We're getting sell orders coming in. You see, they're green because you buy against sellers, not sell with them. They're coming in right here. I didn't see any trapped orders right at the high for the bears to sell against. So this is people trying to sell that. I'm gonna play on Monday. I'm looking at this going, okay, this is looking real good for Monday, because I mean, look at this. We got a little hook up into the close. These bulls didn't get liquidated. I mean, this is looking. It makes me want to see upwards into Monday, but I still need to see the bears screw up and give me elasticity. So this right here, this isn't a screw up because I don't see trapped orders. I don't see the volume coming in trying to chase that idea. We're not seeing it. In fact, we saw the opposite. Who the heck is it that saw that happen? And they were like, let's all sell. And they're causing the sell volume. We wanted to see buy volume right there, not sell volume. So we could still get it a little bit, but this is asking you to answer the hardest question ever. Do you want to hold over the weekend? And for me, the answer is no, not really. I don't. Bulls are front running something into next week. Miguel, maybe. Okay, and I'll tell you why it's maybe. I don't have a liquidity sample down here that I think is great. I don't have awesome buying here. I saw some buying here. At best, maybe this was open interest theft, but I still don't have the bulls setting up the structure, but what I am seeing is that this is very interesting to me because the bears are supposed to be doing great here, and it shoots up, and now it's like moving most of the way back down. If you bought into this, this is pressuring you. Do you want to hold over the weekend? Everything's upside down. The world doesn't make any sense. This is a tough close for everyone. If you're a bear and you saw this come back up and just for a moment give those bulls the opportunity to potentially dump their position, which is probably who these sellers are, then you're sitting there going, we wanted to liquidate those people. And this could really be, and John was asking this a minute ago, this could be seen as a failure. Why did you let that happen, bears? Ooh, why? So this could be seen as a failure in my opinion, and this could be motivation, sort of the start of giving us an elastic market on Monday and seeing the bears fail, the bulls show up. I mean, the bears didn't do super great here. I think that this spike should have been this way. I think this would have been characteristic of the bears, not this way. That this did some things that are troublemakers for the bears. So I think having that push up, getting right to that position that we were trying to liquidate and letting them, even just for a moment, empty some of those positions without having to pay for it is trouble. Trouble with a big T. And this is the kind of trouble that's getting me to go, oh, okay, so bears, you didn't quite pull it off as amazingly as I wanted. So on Monday, again, I'm going to be looking and motivated to pick up something for the elastic side of the market to see if we can get that moving up with the elasticity. See if we can get this to burn off up higher towards zero. Something it could look like this. Price could dip down lower. Maybe they'll say, no, guys, we can do it, and then they'll do that. But then it's too late and it'll just bounce. Or it could gap up and then move higher, and it's like really difficult because this whole idea will end up working, just it had a lot of heat to it. So Tough close, in my opinion. This is a difficult close. It's a hard question to answer for yourself. And I'm not doing anything here. My mindset's into tomorrow or Monday. I want to see what kind of elasticity we can get set up. But I do think missing out on liquidating these bulls is oops. That's a big oops. You should have done it, bears. You're going to convince a couple of investors that you cannot pull the trigger, that you cannot get the job done. And that's going to get people to pull their money from the bear side. And you don't just pull money, you put it onto the other side. And that could start to motivate our sentiment change. We'll have to see on Monday. But I think this was a good indication that the bears just couldn't make it happen. Not what they wanted to happen. Not the thing that we were tracking for this amount of time. A couple hours tracking this whole situation. Everything they needed. All of it. And they couldn't make it happen. That's not looking great for them. But we won't really know until Monday when we get to see how these things play out. If the bears step aside and the bulls come in, or maybe the bulls come in and just crush the bears who tried to not step aside, that would be insane. Because that would be a complete trend reversal and the type of thing that I'd be like, this just trapped in some people and it's over. So we won't really know that until Monday. So right now, I think all of the bets on the table, if you're trying to buy into this and you want to hold over the weekend, you are taking a trailblazer position. And we talked about this, and we still haven't quite got the structure here. You're trying to blaze a new trail, and if you're right and it works, you're going to be looking real good. If it's sideways and not really, be concerned, because trailblazers' risk is higher. They have a higher risk, but they have a higher reward. They have a higher risk because the clarity is not as good. I think today the best trades, just saying, I think this was a pretty good spot. I mean, I tried to tell you guys what I was doing, show you where I was at, what I was doing. And I think that this was an okay position here, where decay moved up, trapped orders, and the bulls had flopped at the open. I think this was okay too. I personally think that this was probably the number one trade, and this was the number two trade. Even though I don't like the bears that much, that looks to me. Having the bulls just screw up the morning and give the bears opportunity after having everything they could want makes this the number one trade. And this is number two because it was based on a potential reality, not a confirmed reality. I thought that there was some potential here to push up, liquidate, and it would have really paid out really well if the bulls had pulled it off. So it was potential, but I think it was really strong potential. So those were the two trades that I thought were really good today, and that's about it. So that's what I think on these. Hopefully letting you know which ones I think were the best will be useful, so you can go back and look over the charts or what was going on during those times and stuff, so you can get an idea of that. Try to understand what made the trade good, but also try to understand what made the other trades not good. Why weren't they the number one trade? Why weren't they the best spot to pop in? Why were they not amazing? Especially the ones like this one here. You might say, well, there's a retest and it ran, so why isn't that one amazing? Or you might say, well, this one looked really good, and that one, why wasn't this the number one trade? You got to go through and sort of answer those questions, and maybe you'll come to different conclusions, which I appreciate. Remember, my objective is to have two people, you and me, with different opinions, where that your opinion is one, my opinion is two, and we create a third opinion by combining our mass knowledge that is better than both of us. And this is the one where that we all get paid a little bit better. So if you have a different opinion, go through, consider the events, think about what they mean, come back with opinions and things that are thought out. And please, traders, please, charts. When you post crap, add charts. We as traders are all addicted to charts. We're okay with words, but we love our charts. So if you're going to post stuff, post a chart with it. If you're like, here's this, here's that, post a chart, because sometimes what's obvious to you on maybe whatever chart you're looking at is not clear on other chart formats or just mentalities. Please, charts. I love to see charts. It's just so much easier to metabolize your opinion if you're putting a chart with it. I know you can't do that on YouTube, but if you're in the Discord, please, charts. I love charts. More of them. Show us your setup. Show us the things you look at. You don't have to share your trades and stuff like that. I know that can add extra risk. I know it's difficult, but charts. Show us what you're working with, what things you look at. When you say things like, there's a this here with an exclamation point as though it's so valid and important, nobody cares, mostly because there's not a chart to it. But if you put a big chart and you can circle maybe or just put it there, then we can all look at it and say, I see what you see. Traders love to see what you see. We love that. So that's just my pleading. Please add charts to your stuff. We all love to see charts. Okay, so that's that. Next week, right in the open, elasticity is what I'm looking for. I have my mind already set, and maybe that's a bad thing that I'm like developing a bias that needs to go. Nonetheless, I'll need to see bears fail, bulls get liquidity before I'm even willing to consider acting at all. We could look at that expectation is the fact that we get to 58. We were at 60 for a minute there, but it popped up. So 58% is pretty good. We could release this tension. We could pump this further. So for this to pump further, I think, here's the kicker, these guys could still get liquidated, and that could help push this down. But again, if you want to pump tension through the day, you need to liquidate the counterparty. So for further down, we need to see those bulls come in, and I think the bulls would need to sort of hit to keep this going. We need to show some legitimate bulls kind of show up, and then the bears just swamp them. And essentially the idea would be if I were planning on pumping this down on Monday, here's what I would be saying to my board of people. We need to convince the bulls that Monday is an excellent buy without actually stepping aside. So you'd want to see the bulls come in and they forgot about the controlling party and they just buy into it. Everything looks good. And the controlling party says, just kidding. And they come in and they slam that down. And you could pump that further throughout the day. And I think it would be a lot of kind of hard work because you're going to need to trick a bunch of people. So that's what I would do if I was looking on the downside. We could liquidate today's bulls, but we need to trap some more to carry that on down lower. For the upside, which I think is looking better after this here, we just need the bears to go, okay, hold on, this is getting a little hot. We didn't quite get the work done we wanted to. Bulls come in, pick that up, and maybe we hop up and it moves down. We get a bullish sample, and then we're able to catch an elastic move up. And then at that high, the bulls are going to be thinking, let's try and sabotage the bears as much as possible during elasticity to see if we can get control of the market. Until they do, remember, the bulls are the dependent party. They depend on the bears to let them in, to let them have stuff. It's a negotiating. This is a game of negotiation through elasticity. So that's what I'm looking for in the directions. We could see some sidewaysness. I think with the tension and the opportunities here, and with the way that this worked out and sabotaging the bulls opportunity and the bears coming in, I think with all this stuff going on, that there's a good chance Monday is not a sideways day. I think there's actually quite a bit of drama going on here. We didn't quite liquidate the bulls, right? The bears didn't quite win, but we know they're active. We know that. I think we can say we know that. We know the bears are here. We did liquidate a group of bulls. So there's a lot of drama here, and so I don't think Monday makes a lot of sense for a flat day. I think Monday makes a lot of sense for a day to figure out, to straighten out just exactly who's going to win this or not. I think the bears did a pretty good job, but I think they screwed up a little bit. Should not have let those bulls out. Should not have done that. That's a oopsie. So that's gonna play into Monday's mentality and investors and stuff like that. So that's where I'm at. Those are the things I'm thinking. I intend on taking advantage of an elastic market on Monday. If the opportunities arise, I will be trying to do that. And I'll be here with you guys, and we'll all maybe try to do it together. If you have a different opinion and you see something I don't, please tell me. Please tell me. Do not let me cut off my own nose. If you see stuff, share. And please, charts. Show me charts. I love charts. Otherwise, if you have questions, there's a link down below to get into the Discord. So you can pop in there, agree to the liability waiver, because I don't want limits on what people can say because they're scared of other traders. Agree to that liability. Know that we're all just trying to be good people working together because we're all in the same boat. We're all in the same boat. We can do this. So hop in there, share your charts, share your opinions. The Zoom link is down there. I know a lot of you use that. I've seen, which I'm glad. And I'll see you guys on Monday.